Hello everyone. If required, please pause and have a look. This is the brief overview of Nifty and Bank Nifty price action from last week. For the week ended October 10th, both Nifty and Sensex performed equally well, posting gains of 1.6% each. With that in mind, let's discuss in detail about what happened last week, weekly wrap for the October 1st week 2025. Last week, the market momentum was really positive throughout. Nifty moved from 24,900 on October 3rd to 25,285 by October 10th, near 400 points increase. And if you look at the daily basis performance, except for one session on October 6th, Monday, FIIs were net sellers for 314 crore rupees. In all the other 4 trading sessions, FIIs were net buyers. So, if you see the weekly basis, Nifty increased 391 points or 1.6% and Sensex also same increased 1.6%. Now, coming to the reasons, FIIs turned net buyers after continuous selling, supportive global momentum, especially US tech rally, Q2 FY 2026 earnings season kickstart with TCS results, and healthy business updates from banking and financial stocks. So, these 4 reasons were the main drivers behind the last week rally. Let's look at little bit in detail. Global momentum had been really strong. Japan got the new government, which market believes it's a business-friendly one. Then US FOMC meeting minutes highlighted that 10 FOMC members out of 19 favoring 2 more 25 basis point rate cut before the end of coming December, which in turn made both Nasdaq and S&P 500 to touch fresh all-time highs on multiple sessions during the week, and it was led by AI and tech stocks, which in a way helped the Indian market to stay positive. Now, coming to the domestic side, the Q2 FY 2026 earnings season officially kickstarted last week, and the largest Indian IT company, TCS, declared its results on Thursday evening in the aftermarket hours. Here, company's overall performance was decent in September 2025 quarter, yet on Friday, stock reacted negative due to concerns over their macro environment and their restructuring, which dragging the sentiment and morale down. But overall, the whole last week, IT sector sentiment was positive because of short covering ahead of results, which I will explain in detail when we discuss the sector-wise performance. Then, about the banking and financial stock positivity, in the last week's week ahead itself, we discussed about that in detail. During the last weekend, big banking financial companies such as HDFC Bank and Bajaj Finance, etc., released their Q2 FY 2026 business update. Please note, not earnings results, but business updates like how much bank loan and deposit grew, how much their asset under management grew, etc. all came really strong numbers. And during the weekdays also, other PSU banks like Punjab National Bank and Indian Bank and private banks like Kotak Bank released their business update. Again, all were really good, and it was led by Diwali festival related expenditure and the demand increase due to the GST rationalization. So overall, these 4 reasons, banks business update, IT stock short covering, FII buying and good global momentum made the Indian market really good. Other than that, on the IPO front, LG Electronics got the massive positive response from the market. It's crazy. Institutional investors subscribed to the LG Electronics IPO for 166 times. NII non-institutional investors subscribed for 22.4 times, and only retail who did it for 3.6 times. Still, it's massive. See, LG Electronics wants to raise the IPO for 11,600 crore rupees, and all that will be offered for sale. In response, during the 3-day subscription window, they got 4.4 lakh crore rupees, which is completely surreal for me. Anyway, it is what it is. Moving on, if you see the sector wise, except for 4 sectors, all others closed positive. The 4 sectors that closed negative were auto, metal, power and FMCG, but all of them were down marginally, only between 0.1 to 0.3%. Then the major gainers, IT sector was the star performer, up 4.3%. The reason is just short covering ahead of the TCS results. If required, please pause and have a look. Before last week, top 4 IT stocks year to date fell about 19 to 25%, and the whole IT sector fell about 25%. So no wonder it had the short covering. Then it was followed by healthcare sector, which increased 2.7%. Here the major positive was government increased the rates of 2000 medical procedures under CGHS scheme, Central Government Health Scheme, after 15 years. Some of the procedures increased between 5 to 30%, which is really positive for whole healthcare stocks. Hence, healthcare stocks rallied. Finally, realty, banking and consumer durables all increased around 2%. Even the broader market, mid-cap increased 1.5%, which is almost in line with Nifty and Sensex. On the other hand, small cap was flat. Now, stock-wise on the Nifty 50 stocks, Max Healthcare was the major gainer, up 8.2%. I guess last week it was down near 5% because FIIs were booking profit after the rebalancing. But this week it bounced back strongly because of the central government health scheme, which we discussed earlier. Then HCL Tech increased 7.3%, followed by Zomato, Infosys and TCS increased between 4 to 6%. So 4 of them were IT stocks. And on the downside, Tata Motors was the major loser, down 5.2%. It was down due to some internal company related issue, not the sector issue. Followed by Trent, HDFC Life Insurance, Adani Enterprises and Tata Consumer Products was down between 1 to 3%. Then about institution wise, in the cash market this week was different from previous weeks. For the last many weeks, FIIs were continuous net sellers, but last week out of 5 trading sessions, in 4 sessions they were net buyers. Only on Monday, October 6th, they were net sellers for 314 crore rupees, but in all other 4 sessions they were net buyers. So on the weekly basis, FIIs net bought for 2,976 crore rupees, which is really a positive sign and a reversal from their previous trend. I mean, honestly, I don't remember when was the last time FI was net buyers in the weekly basis. If we calculate on average for every session, they net bought for near 600 crore rupees. Then moving to DII, as usual in all 5 trading sessions, they were net buyers, and on weekly basis, last week alone, DII net bought for 8,391 crore rupees. So on an average, they net bought for near 1,700 crore rupees each session, which is slightly lower than their usual average, but still healthy. The important thing here is both FII and DII were net buyers, which is one of the main reasons why the market was able to sustain its positive momentum throughout the week. So that's all about the Indian stock market. Other than that, Rupee was very stable throughout the week. It was trading between 88.7 to 88.9 rupees per US dollar, almost flat. And for the week ended October 3rd, India's Forex Reserves decreased marginally to 699.96 billion US dollars from previous week's 700.24 billion US dollar. So just a minor decline of 280 million US dollars. And regarding gold, because of Chinese central bank buying and US market shutdown concerns, which all we discussed in detail in the daily market report video, so gold price increased further to above 4,000 US dollar per ounce, but in the end fell to 3,976.9 US dollar per ounce. Last week we discussed it was between 3,850 to 3,880 US dollar per ounce. So another 100 US dollar increase. The rally is continuing week after week. Then one more macro data I want to mention. Composite PMI data for India came as 61.9 in September month, which was slightly lower compared to 63.2 in August month. I mean, mostly good. Still, it's very respectable PMI number, but it was decreased because of drop in export orders. So the growth is still there, but the pace has slowed down a bit. So that's all in this video. Hope you got some information. Please consider subscribing to the channel and liking the video so that it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as not a SEBI risk advisor. I'm doing this for me and viewers' educational purpose only. Thanks for watching.